What's up, everyone? It's Karthik with MoneyVest. So markets here slightly flat. The Nasdaq, more specifically though, rallying with Tesla up a little bit over 6% on the day after some speculated news came out that the Donald Trump presidency and the administration is going to ease some of those regulations around full self-driving. And Tesla stock was already popping a little bit over 6%, at one point over 7.5%, closer to 8% on the day. But of course, the big star this week is going to be Nvidia. So markets overall, S&P 500 was very flat. We had the Nasdaq here pushing up over 60 basis points thanks to Tesla. The Dow Jones was slightly down a little bit over 55 points here, and Nasdaq closes higher as Tesla rally helps start week on an upbeat note. And of course, we have Nvidia earnings coming out later this week. So on Wednesday, on the 20th, we've got Nvidia. Very, very important numbers coming out, as well as Palo Alto Networks, and a few other really important companies, especially some of the retail giants like Walmart, TJX, and a few other companies. So if you come over to our market calendar, we do have Walmart, we have Dick's Sporting Goods, we have TJX. Target is also scheduled to report numbers on the same day as Nvidia, as well as Snowflake and Intuit are all scheduled to report earnings later this week. So get ready. Today was a pretty light week. We didn't really have a lot of companies reporting, and we're kind of towards the end of the earnings season as well. But we still do have one of the biggest companies in the market, which is going to be Nvidia. But Tesla stock here was the biggest leader in the S&P 500, popping after a report that Trump wants to relax the US self-driving rules. So Tesla shares jumping on Monday following a report. Again, this is speculated report, but there's no verification yet, that President-elect Donald Trump's transition team is planning to make the federal framework to regulate self-driving vehicles a top priority under their administration with the US Transport Department. So as a result, Tesla was one of the biggest leaders here. So if you come over to market concentration, we had over $213 billion worth of gains in the S&P 500 with, of course, if you filter this by top gainers, Tesla here at the top of the list, over $63 billion coming in, up over 5.6%. Apple here, $46 billion. Then we had Google, $36 billion. Netflix continues to push higher to new all-time highs here. Absolutely phenomenal. And of course, Palantir did get smacked around a little bit here, down over 6.8, almost 7%. There was going to be some profit taking. It was pretty inevitable that we were going to see some profit taking eventually, and down over 11 billion. And Nvidia here, one of the biggest losers in the S&P 500, down 1.2%. But even with a 1.2%, we are seeing a $45 billion sell-off here in Nvidia. That just goes to show how big this company has really become from a market cap standpoint. So coming back over to this right here, the star this week is our friend Nvidia. This was Kim Forrest, Chief Investment Officer at Bouquet Capital Partners. Unless some information comes out before then, the market is going to wait and see what's going on with Nvidia. And Nvidia really has the power and the capacity to move the entire market, given how large it is. The size and scale of this company is really going to be enough to essentially pivot the entire sentiment. Now, we are seeing a little bit of a pullback, and to be very honest, I think Nvidia is priced for perfection here. I really am not sure how much can they really surprise us to the upside with some massive growth rates and margins coming in. I think we have already seen a lot of those numbers already priced into the stock. Now, I'd be very surprised if Nvidia reports some incredibly high numbers, in other words, beating expectations. Right now, you've got a $33.6 billion revenue expectation with a 76 cents in earnings per share. So I'd be very surprised if Nvidia comes in with some very strong beats and at the same time also popping after hours. Now, I do have a pretty large position in my options portfolio in both Tesla and Nvidia. Tesla, as you already know, was up over 6%, but Nvidia is one of the bigger positions in the options portfolio. So it's going to be a very important day for me on Wednesday. I am going to be traveling to New York. So we'll see if we can do that live stream from New York on Wednesday here and see what those numbers actually look like. So $33.6 billion revenue expectation, 76 cents in earnings per share. And I will be looking at rolling out my option as well. So again, if you want to get access to all the trade alerts, we've had a lot of people join us more recently. So you can see that we're growing every single day. Now there's over 3,000 members that are part of the MoneyVest community. Link's going to be down below. You can also save 2 free months with paying annually, so 16% annual discount, and you get access to everything, including the MoneyVest website. By the way, we're going to be raising our prices very soon in January of 25 because we're going to be accessing new data providers, and there's going to be more features included. So you can lock this price in forever, access the entire access to the MoneyVest website, the Discord, weekly options alerts, trade alerts, engage with over thousands of traders and investors globally. And of course, if you go with the MoneyVest education, you can start your learning today and access all the 4 educational courses: fundamental analysis, technical analysis. We got options trading as part of that. And of course, very important psychology of investing and money course as well. I also posted week number 12. This actually is, let me just reload this page and you will see week number 12 official update also being posted. By the way, 3,051 members here. So again, thank you so much for joining in and welcome to everybody new that's joined us. So this was 8 hours ago. I posted this update for the options portfolio. You can see all my positions that are open right now, how much I'm up on the year. So that's also going to be available for all the members to also access. So link's going to be down below. We'd love to have you on board. And again, if you have any questions, I'm more than happy to answer all of them for you. Okay, now coming over to the very important number, which is the MoneyVest index. Once again, pushing back up right before market close, getting up to 3.63. And I was going over this with one of my closest friends, explaining the idea of the MoneyVest index. And you can see that in 2024, we really only have seen 2 very good, serious, high quality buying opportunities. Other than that, there's really not been that many. And we've also included for the triggers for every single year. So this is a table that we're also going to be deploying in the MoneyVest platform later this week. So you can see every single year, how many triggers have we seen for those light buys, heavy buys, and those no-brainer buying opportunities. What's been the minimum and the maximum values for the MoneyVest index, and what's been the average and the median value for the MoneyVest index for that particular year. So if you come over to 2024, you'll notice that the minimum value has been 3.04. So it's been a very, very strong year. We haven't really seen the MoneyVest index dip below 3. The maximum value has been 4.2, and it's averaged about 3.79 with a median value of 3.84. So it's been a very strong year. It kind of tells us a little bit more about the overall market dynamics and how strong it's been in 2024, and the fact that we haven't really seen any serious, good, high quality buying opportunities. Maybe a couple in April and in August. Those were the only 2 months that I consider them to be a very good buying opportunity. And same as 2017, right? This has been a very similar year to 2017, where you'll notice the lowest value was 3.19, right about there. With a high value of 4.26, and the median and the average was 3.84, 3.86 respectively. So very, very elevated market, and we didn't really see any buy triggers in that particular year. You can see 0 across the board in 2017. And again, so this is the year-wise table that's going to be available for everyone. We're going to deploy this very soon, but this is one of the most important indicators for me personally to better understand the market dynamics, the positioning, the sentiment, the risk reward, and how much do I need to really deploy capital versus how much do I need to be more cautious and kind of hold back. And right now, considering that we're at 3.63, yes, the markets rolled over last week. We saw a 2% decline in the S&P. The Nasdaq was down over 3%. We're still in the optimistic zone. So this is still not a level where I would feel comfortable, deploying a lot of capital. So when the time comes, when the opportunity presents itself, that's when we're going to start being a lot more aggressive. And you can also refer to the shopping list here, which gives you access to 29 stocks that I believe are the highest quality with my fair value and my buy targets as well. So coming back over to the markets, a few things that I really want to discuss is the 10-year treasuries. So the first thing we're going to go over is the 10-year yield, which is now sitting at 4.41%. And of course, it's been moving higher and higher. Now, the question is, has this actually peaked? That's the real question. And the answer, nobody really knows. But in my opinion, we could see a short-term pullback in the 10-year treasuries, considering that we're coming back up to that level at 4.5%. So 4.5%, as you can see, I've kind of marked this out from back in July of 24, where we previously got tapped out right about here. And then we started to see a little bit of a pullback. Not just a pullback, we actually saw a pretty significant decline in the 10-year treasuries of almost 20%. And that's exactly where TLT and TMF kind of bottomed out. And then we started to see a very nice rally back higher. So this was kind of around those levels here. And then we saw a very nice pop back up to over $100 for TLT. And right now we're coming back up to that support here. Not saying that we're going to see a very similar rally back up, but I think there is possibility for us to see a bit of a technical rebound, getting back up to 93, 94 bucks for TLT and for the 10-year treasuries to cool off a little bit. But that's more of a short to medium term trade, because longer term, I do still believe that we're heading into a higher interest rate environment with the deficit spending, with a lot of tax cuts, and everything that's going to be coming through with the new administration. So for that, I think it's still going to be pro-economy, pro-markets, earnings per share is still going to do well. But I think the 10-year treasuries and interest rates in general could still be elevated, considering what we have already seen in the past. Now, coming over to the volatility here. So we, of course, did see a pretty significant spike on Friday, up over 12, almost 13%. Friday was brutal for the market, as we already know. But today we were down about 3.4%, coming back to 15.5. And of course, we got a little bit of a gap to fill in over here for the volatility as well. Coming over to market breadth here. So we still are pretty strong. I mean, majority of stocks are still trading above their moving averages, 20, 50, and 200 simple moving averages. But if the market breadth continues to weaken, that is not a great sign, but at the same time, it's going to represent some buying opportunities for us eventually. So, really the bottom line that I want to get across in most of my videos is that it's really not that complicated. And at MoneyVest here, our goal has always been to keep things super simple and not to overcomplicate things. And that is to say that if there are specific high quality signals, right, we want to cut out all the noise. There's always going to be speculation around recession, about recession probabilities, about seasonality, about, different things, different macro factors, where the 10-year treasuries are going to be, how is this policy going to affect what sector. There's always going to be speculation and a lot of noise around a lot of different things. But at the end of the day, we really want the numbers and the math and specific high quality signals to do the work for us, right? And that's what I really want to get across in almost all of my videos. And most of the times you'll hear me refer to just a select few indicators. The MoneyVest index, where we are from a market breadth standpoint. So in other words, percentage of stocks trading above, below their moving averages, the 10-year treasuries, the volatility, the dollar index, and of course the S&P 500 itself. So we kind of have the market snapshot at our disposal as well. So you can see the market snapshot here. We're still well within a dip. Most stocks are in a pullback or a correction. Netflix here, once again, hitting a new all-time high, which is, again, ridiculous. But then Magnificent 7 stocks are still in a pullback or a correction. So down anywhere from 5 to as much as 18, 20% from their all-time highs. And it's kind of interesting to see that Tesla now is in a correction. We're now less than 20% away from our all-time highs, which is actually very, very good to see for Tesla after such a long time. So it really is cutting out all the noise, focusing on the most important signals, and just letting math, numbers, and high quality signals do the work for us. And so right now, I am kind of warm in this market, and I'm still raising capital, still in the process of raising a little bit more cash. And if the market does give us that opportunity, pulls back, let's say more than 5%, gets into a pullback or a little bit of a correction, MoneyVest index comes down below 3.5, volatility spikes above 20, that's the time I'm going to be ready to deploy capital again. Until then, just relax, let the markets do the work for us. And again, Tesla obviously doing really well, and Nvidia, will see what ends up happening later this week. Bitcoin, on the other hand, continues to trade near all-time highs, a little bit over $91,000. So absolutely phenomenal from Bitcoin, and the crude oil prices are sitting at just over $69 per barrel at the moment. Now, coming over to indices, S&P 500 here. We've got SPX getting a little bit of a bounce back up above that support of 58.93 or 5900, right around that level here. And of course, we got tagged at that resistance at 6,000, last week. So that is still going to be that resistance to keep in mind. And of course, we got NASDAQ here also bouncing off of that support perfectly at 18.6, something that we discussed in our previous updates. And of course, the resistance sits all the way up to as much as 19.3 for the NASDAQ composite. So support level is going to stay put at 18.6 here. Nice little technical rebound, a small dip for the NASDAQ. We pulled off, a little bit over 3.8, almost 4% down. And we're getting about a bit of a bounce back higher once again. Coming over to Apple here. So actually, we've got different charts for these companies. So coming over to Apple, because we're going to be going over some ranges instead of exact values. Apple here is still consolidating sideways in that range. Support level 214 up to as much as 235. So that's the consolidation that we're seeing for Apple right now. Amazon, on the other hand, also coming down to that support. It was overbought, so we're seeing a little bit of a pullback on the RSI. The MACD also on the verge of crossing below that signal line. And Amazon here coming down to that support inside this green rectangle in the low 200s down to potentially in the 190s again. Coming over to Tesla. And Tesla here with a very nice pop back up, a little bit over 5.6%, almost 6% higher. And next target and resistance is going to be at 382. So as discussed for Tesla here, we were expecting a little bit of a pullback after this huge parabolic run up, and validated that support. And now we're seeing that next potential leg up for Tesla again. So next target and resistance is going to be in the 380s to as much as $400 for Tesla. Coming over to Nvidia, and Nvidia here also rolling over. Pre-earnings down about 1.2%. Support level is going to stay put in the 130s here. And of course, we got a resistance all the way up to as much as 149, closer to 150. Again, consistently making higher highs here. Support level is going to stay put at 132, 133 for Nvidia. Advanced Micro Devices, on the other hand, continues to also be a little bit more on the weaker side. The entire semiconductors and chip sector has been very weak. More recently, however, today was relatively strong. But of course, last week was brutal for a lot of these chip stocks. So support level is going to stay put right about here inside this area of green demand in the 130s, resistance all the way up to $150 for Advanced Micro Devices. Going over to Meta Platforms, and Meta here also rolling over just a little bit off of that resistance at $600. Support level is going to be at $539. So we've got a lot of consolidation sideways, down to as low as $493 for Meta Platforms. And Netflix here also just pushing up. Support level is going to stay put at $772 with a very nice new all-time high for Netflix. And Google here also pushing off of that support back up to $176, $177. Resistance up to $183 for Google. And of course, we got Microsoft consolidating sideways a little bit. Resistance at $432, $441. Support level sitting right here inside this green rectangle. A lot of consolidation sideways for Microsoft as well. And finally, we come over to PayPal and Visa. So PayPal here just pulling off a little bit off of that resistance at $88, $89 as we have discussed before. Support level is going to be $81. We are a little bit closer to overbought level, so this is not a surprise. We're seeing a bit of a pullback. Support level at $81. And finally, we come over to Visa. We're seeing a little bit of a rally in Visa back up to all-time highs. Got a little bit of a gap to fill here. Support level is going to stay put at $291. And then finally, we come over to Enphase. Enphase more recently has seen very nice moves back up on the day, up almost 5%. Still getting validated at that support here at $58, $59. It is still pretty oversold right now. And resistance and target's going to stay put at $73 for Enphase. And finally, we come over to Costco, also consolidating sideways in that range, getting rejected at that resistance at $919, $920. The support level sitting roughly at $867 for Costco. So hope you all enjoyed this video and a complete update on the markets. Really not a lot for us to go over other than the fact that Nvidia earnings are coming up, Tesla with a huge pop on the day, and we are still in the optimistic zone for the Money Invest Index. Again, make sure you drop a like, subscribe to the channel. Link's going to be down below if you want to join us. Of course, with that 16% annual discount. I've opened up a few more spots here. I think there's only one more spot left. If you want to take advantage of that, you get access to everything. And as always, let me know if you have any questions. Happy investing. I'll see you all in the next video.